Karen Ubell is a partner in Goodwin's technology group and blockchain and digital currency practice. She represents investors and issuers in digital asset offerings, private financings, and securities offerings, and advises companies in developing blockchain technologies. Formerly at the Division of Corporation Finance at the SEC, Karen offers a unique perspective on regulatory compliance in the crypto space.
So Karen, thank you so much for being here.
Thank you. Well, nice to see you. Nice to be here.
Nice to see you as well. So let's start from, I guess, the beginning of when you decided to pursue a legal career.
Well, I went to law school because I wanted to be a politician, I thought.
Oh.
But then I did that. I did some summer internships, and I thought, I don't think this is quite for me. So ended up just going to a large law firm, and they're the best places to see a lot of different things and figure out what it is you might like and what you might want to do. And so I started off in Atlanta, from North Carolina, started off in Atlanta. The financial crisis hit and hit Atlanta quite hard. And so ended up from there actually at the SEC in Washington, D.C. in the Division of Corporation Finance. So that was where I really kind of honed in on a securities law practice, focusing on public company work, securities regulations, reviewing IPOs, kind of the typical work of the SEC, reviewing 10Ks and things like that. But then ended up in a specialized office called the Office of Capital Markets Trends, which was just a small group created to kind of look into the market and see weird, unique, novel things that are happening in the capital markets, and then addressing and looking at new securities products that came in the door. Mm-hmm. So when the Winklevoss filed the Bitcoin ETF, the first Bitcoin ETF, that was weird, unique, and novel. So it came to our desk, and that was when I first got kind of interested in this space, the first exposure that I had to this new technology, and what it was, how it might be used in a lot of different interesting ways, and found it interesting. But we actually had to decide at that point whether Bitcoin was more like a security or a commodity, because it dictates whether you're this is technical, but a 33 Act ETF or a 40 Act ETF. And so there was a group of us there that decided that it was more akin to a commodity at that time. And so it could proceed under the 33 Act, akin to like a gold ETF or a copper ETF or any other commodity-based ETF. So that's where I got interested in the space, and that was, I was working for the government, so I had time to read, learn, paid my way to a conference back when crypto conferences were 100 people and not 10,000, and got connected with people in the space, and really just started learning more about the technology and found it really interesting. So that was where I got into the space first.
So how long were you working in DC?
I was there for 6 years.
Okay.
And then just got a little tired, a little bored of DC and the government.
Well, you mentioned working for the government. I had some time. What does that mean?
Well, I think unlike at a law firm where you're doing the work that your clients demand, when you're at the government, there are opportunities to say, hey, I think this, we were in the Office of Capital Markets Trends, to say, hey, I think this is a trend. I think this is something we should be thinking about and be aware of. And so I asked if, I could kind of spend time reading about that and learning about it. And they said, sure. And so this office, and actually, myself and some others, really built out the expertise on digital assets and cryptocurrencies. And a lot of the people that are still there that I worked with are the ones that are really making a lot of the policy from the SEC now, even to this day. So,
well, working in Silicon Valley is different than working on Capitol Hill, to say the least.
Certainly much faster paced, yeah.
Faster paced, and you've been in the world of crypto for some time. And I know that you were working for the government in some of the burgeoning stages of this, but what initially made you feel like, yeah, this is what I want to do?
Well, I think the move out to Silicon Valley was really driven by wanting to, number one, have a full life cycle practice. There are all these great stories in Silicon Valley of the lawyers that, filed the incorporation papers for, some unicorn and then eventually took them public. And I thought that was a really exciting prospect to really kind of be a full life cycle lawyer and work with a client for all of those different years and all of those different phases.
Like you're a team member.
Yeah, exactly. And so that's what I came out here to learn. And I knew the tail end of that life cycle, but I didn't know the start. So that's what I came out here to learn. Started doing that, and then in 2017, kind of the ICO craze started to boom, and with my experience from the SEC, very quickly said, hey, somebody's going to come in here and regulate. We need to start thinking about how we can do this in as compliant a way as possible, even though this is brand new, entirely different models of funding and financing and brand new technology. But, regulators were going to be looking this direction. And so I actually worked with the folks at Protocol Labs and also some people at the time I was at Cooley on the SAFT white paper. And so that's how, we first started kind of developing, really a practice focused on how to do this in the most regulatory compliant way possible, which is really still what I do now, because even, 5 years later, we don't have any specific guidance. But as for the technology and kind of my passion for the space, it was very clear early on, the vision that the founders had for this technology. Even going back to my time at the SEC, really hearing from the Winklevoss that came in and talked about Bitcoin and how it was different than our traditional financial systems and how it could be better. And I think that even that kind of sparked this idea of this is a transformative technology. And when we got to 2017, there were just so many ideas at that point about how this could be used to disintermediate and decentralize and put value and giving the tools to the people that are actually creating and driving the value and the network effects and bringing them into the fold of the value creation of what they're actually driving. And so I just thought it was really interesting, and frankly, as a lawyer, so few opportunities come along to be part of something entirely new. And that's where we were, and frankly, here where we still are, of what are the laws, what are the regulations, how do we do this? And that's really a unique opportunity as a lawyer to get to be part of thinking about something in an entirely new way.
I think a lot of people, unless you are in the legal space, people hire lawyers for all sorts of things. How do you feel like your clients find you?
Well, I think they find me through a lot of referrals. I've been in the space now, as I said, for a long time.
Sure.
But I think,
good rep.
Yeah,
that counts a lot.
I think I have a good rep. Clients like me. They like the results. I've worked with a lot of projects that have successfully launched and are now, a post-launch world of a real working protocol and a token that's used exactly how everybody wanted it to be used. And so that history is obviously is something that people see and are aware of. But I think what I love about this job, and what I think that my clients like about it too, is that I really think of it as almost like product counsel, because in a prior iteration of technology, you would never call your lawyers to sit down and think about how do I design this protocol or design this token. But because the regulatory layer is so important in this space, I get to be on those calls with my clients, as you've got the business folks, you've got the tech team, you've got the engineers.
It is project management.
Yeah, and it's product management, product design. How do we, here's what our business objectives are. Here's, how we think we can build this and launch it. Well, if you can add this feature in, I think you're going to give yourself, more protection, or, I think you're going to have a better arguments under, the regulatory landscape as we understand it. And they say, okay, can we do that from a technology perspective? I mean, it's like the true whiteboarding session, and I get to be a part of that. And I that's what makes this job really fun. But I think that also, I hope, is what my clients see as really the value and the difference for my role, is that because I have an understanding of this technology that I've built over 5-6 years, I can actually be a part of that conversation in a meaningful way, and it's
instead
fun.
of just being reactionary.
Right, or just telling them no, right? I mean, any lawyer, I think that's why lawyers get a bad rap sometimes, right? Is, no, you can't do that, and that's just not the approach that I want to take. I mean, and that's part of the Silicon Valley ethos as well. You're trying to find ways to help your clients achieve their goals and achieve their objectives in the most compliant way possible the path that we can find.
So what if you, I assume you've probably worked with companies of various sizes, but what, especially in the crypto space, do you find people come to you and they know the least about, and they need your expertise the most when it comes to, okay, we want to be part of the future, we want to, be on, the cutting edge. We don't really know what we're talking about.
Well, I think that it's the very same thing where these are founders sometimes that have launched projects and companies in the past, and they never would have needed necessarily a lawyer on that front end. They may need it on the back end for a privacy policy, terms of service, and various things. And so this is different for them to come in and they know that they have to get a lawyer involved very, very early on that product design. And everybody knows the Howey test. If you had told me when I was a third year in law school taking securities regs that I would talk so much about the Howey test with non-lawyers, I certainly would be surprised. And most securities lawyers would be surprised. But they all come in and they know the Howey test, and then they know that it's a fraught regulatory landscape. And so they're really just, the thing that's really interesting, and I like to try and convey this to the regulators when I talk to them about it. People come to me to say, how can I do this in a compliant way? They want to comply with the law.
Right.
People don't want to be putting themselves at risk. They don't want to put their reputation at risk.
Pretty much everyone's not going to be like, I want to go to prison.
Right. No, nobody wants to go to prison, and that's my goal, right?
Yeah.
But also, ultimately, it's just not, in most other areas of the law, you can tell people if you do it this way, this way, this way, this way, you're going to be fine.
Yeah.
Here, we're really working through the facts and the specific pieces of what they're doing and what they're trying to design and what they're trying to build and what they're trying to launch. So I think that's, people come in and they know that they've got to get ahead of the regulatory environment, but they just, they don't necessarily know how, because even we lawyers are struggling to kind of always figure out the best path.
Figuring out the next best path, whether or not the government agrees with you, what do you think the path is best for most companies in the crypto space?
I think that these things are more, these tokens and these digital assets are more akin to commodities than they are securities, and that people are not using this as a tool to raise money anymore. They are using it as an essential element of a protocol and a new way of interacting, a new way of transacting, a new way of communicating that requires a token to make that work in a trustless environment. And so that's not a security at its core. It's a parcel of information. It's a currency. It's 1,000 different things. And so I think that painting with a broad brush, which is what we're seeing coming out of DC, particularly from the SEC, and saying, oh, this is just a new technology layer on an old, fundraising tool, and new technology, we've dealt with that in the past. But I don't think that's right, because it's not just new technology. It's an entirely new asset, an entirely new way of transacting and interacting. And so it's not just common stock that's now digital. That's not, and that's, I think, how some of the folks at the SEC have been approaching it, and so we can just fit it easily into the registration requirements. So I think that these things are designed to be more akin to a commodity in the future, and so allowing them to move and trade with the high levels of liquidity and and transaction volume across the globe in micropayments. That's what we need to do to allow for this technology to thrive. And I think a commodities regulatory regime is much more well suited for that. The challenge with the SEC is that disclosure is their having worked there for a long time, it's free and it's full and fair disclosure, so that investors can invest in whatever they want, but they have full disclosure and knowledge and understanding about what they're investing in.
Right.
And so even if we were to kind of use a securities law regime, most people would say, sure, disclosure is not the problem. If all I had to do was provide some disclosure and get the regulatory certainty that I can launch this project, that would be fine. The challenge is that if these tokens are securities, they have to trade on a registered exchange or an ATS. They have to use a broker-dealer or intermediaries. They settle potentially in a T+2 instead of instantaneously. It slows down the rails that blockchain has specifically been designed to speed up.
Right.
And so I don't think it can function under the entirety of a securities regulatory regime, but I think there are pieces of it that maybe we could agree upon that are more aligned with the SEC's investor protection mandate.
Do you feel like at the federal level there is a way to get closer to what you're describing rather than the bottlenecks that we see now?
I think so, and I think that there are some congressional efforts that are designed that really take that into account. I think the congressional bills that have been introduced are much more sophisticated than what we have seen in the past, and I think that they are taking into account the technology. They're acknowledging that this is valuable technology and trying to build out a regime that allows it to thrive, but balancing some of the things that these regulators do need to balance. And I think it's better at a federal level than a state level, because then everybody's going to comply with 50 different regimes. And I do think that we can get there. That being said, I still think the lightest touch possible is the best. And obviously there are some schemes and there are frauds, and I think I saw somewhere somebody talking about how in phases of new technology, oftentimes the scam phase comes second or third or whatever, right? And we're at that phase, and it happens with every single new technology that develops. And it would be great if there were mechanisms for regulating that, but finding ways to let some of the real innovative projects continue to grow and thrive and realize the true potential of this technology.
Well, speaking of schemes, crypto is rife with schemes, and it sounds like from most of the stories that I read, most of the time it's human error. It's a phishing scheme, and someone just gets duped, and a lot of money gets lost, and it's confusing to understand exactly what happened. But it seems like mostly this is just humans and humans, kind of stuff going on. What are your thoughts on that?
I think that's true. I mean, the other thing I think we see a lot is that humans finding ways to exploit code for their own benefit. I think that's what we saw with a lot of the things that ultimately caused some haywire a couple months ago.
Sure.
Or at least that's some of the theories. But I think that that's absolutely, there are people that are out there that are going to try and defraud people by saying, hey, here's your chance to invest in a crypto scheme and make 600% return. And they take that money and you never hear from them again. And that's certainly, there are bad actors and there are fraudulent actors out there. But I think the interesting thing is that is watching how when you use software code, I mean, so many instances of this where there have been bad actors, the protocol has actually come together to fix it in a lot of different ways somehow. I mean, we saw that at the very beginning with the Ethereum hack back with the DAO, and everybody you forked it and tried to kind of fix what had gone wrong. Now, certain people that think code is law don't think that that's something that we should be that protocols should be doing. But I think it's interesting to see in those cases where you have bad actors, it's very interesting to see how the protocol governance has come back to try to fix it, or they've been able to track it down and return a large portion of the hack or the whatever was stolen. So.
Sure. Well, you mentioned DAOs. What are your thoughts on DAOs in general?
I think it's a really interesting and innovative concept. I think we are still at the very, very beginning stages of understanding how they will work and how they will be implemented. I think decentralized governance is really interesting. The idea behind so much of crypto is putting the hands in the people that are true stakeholders. Yeah. And I think there's a lot of value in that. And I think that that's, a really interesting concept, right? Is giving the people that are actually building or actually using or actually developing the ability to have a say in the kind of the management and the forward path of a particular project is really interesting and exciting. And I think that's a concept that is going to continue to grow and evolve. I don't think that the legal framework is there yet, and I think there's a lot of thinking to do on how it's going to work. I mean, there are wrappers for, out of Wyoming, and I think also in Delaware, you can make it work to kind of create a limited liability and a corporate entity, but it still begs the question of, who can sign on behalf of a DAO? How do you set up a bank account? Who pays taxes? Is there limited liability? And, how do you respond?
I would think as, someone's legal counsel, you're talking to somebody,
Right.
And is that person more in charge than the next person? Even if there's however many people that are involved in the DAO that are supposed to have equal rights.
Yeah, I think that's the other challenge of this, and I think the criticism that many regulators have levied is it really decentralized? And if you can still point to someone in charge, is it decentralized? And I would argue that it can very much be decentralized, even if there's still one or two people, because more likely than not, there's not just one or two people. There are many people that are contributing to a successful project. But I think that the other thing that we've seen with DAOs is how do they react quickly? When you have the corporate form, you have a board of directors that set the strategic direction and make big policy and kind of long-term strategic direction decisions for the company. Then you have the officers who are executing on that and are there and able to kind of respond quickly and run the day-to-day business of the corporation. And then you have shareholders that are, really passive, right? They're usually not, they vote on election of the directors, but very few things.
Yeah.
And so, here we've replaced the shareholders with token holders who are true stakeholders. And hopefully you have within that group people who have more passion and will be active. I think the risk is what if there aren't, right? I mean, we have shareholders that don't return their proxies for public companies, and we have low voter turnout in our elections. And so if we have direct democracy to govern protocols, will it work, or will it just revert to almost like an oligarchy, right? That those specific high-value stakeholders dictating all of the changes, and that may not be a bad thing,
right?
Because they are the stakeholders, and they. But it are there checks on that? And then also, without officers and directors, how do you potentially respond to a crisis like the hacks or things like that?
Speaking of crises, have there been situations where you have been, I don't know, approached by a company, individual, whatever, and you go, I'm not gonna touch this one. This just, I think we're a little too messy for me.
I think my gauge of that is when somebody comes in the door, does it seem like do they wanna, like I mentioned, do they wanna be compliant? Are they trying to find that compliant path? Are they gonna listen? Are they gonna try and find those tweaks? Or are they just looking for somebody to kind of bless what they want to do and sit in the background
and say legally you're fine?
Yeah, right, exactly, and which is not typically my role. So so those folks, I think, that are just kind of blazing ahead, oftentimes are challenging as clients, and I think we want folks that are looking for real legal advice and looking for that compliant path. I mean, there are certainly things that, you hear about and people call you up and you say, well, we wish you the best of luck,
Right. Yeah.
So.
You can't take them all.
No, you can't take them all. And, sometimes you just kind of say, well, you should just, take a look at this and this. And, but we wish you well. So that certainly happens.
Well, you mentioned the last couple months have been, some people call it crypto winter, whatever it is, pretty volatile. And this is coming off, and I say this with much regret, coming off a real high at the end of the winter when I got involved in a little bit of crypto, just a little bit. And yeah, that didn't go so well for me. Very bad timing on my part. But I'm just kind of playing around.
Yeah.
If you're actually working with a company and there's a lot of financial stuff at stake and livelihoods at stake, how do you feel about downturns like this? Because they're pretty dramatic.
Yeah, I think it actually, a lot of people are viewing it with a little, certainly their asset values have gone down, but I think a lot of people are viewing it as an opportunity to really focus on building and kind of letting the hype die down, and I think that both investors and companies are those that have raised, so and a lot of people did raise a lot of money in the past, in the kind of the 6 months or even a year leading up, so they have a lot of runway and they can just kind of dig in, focus on building product, and I think that there's still a ton of activity in this space. I mean, I think that the people that I'm seeing now, that are still willing to give it a go in a bear market are really people that believe in how this technology can be transformative to a particular industry or particular product, or they're longtime multiple founders that are applying these ideas of blockchain technology to an area where they have otherwise already built maybe a Web 2 company, and let's think about how we can move this into a Web 3 space. And so I think that I think a lot of people, while we're all kind of sad to see that value go, I think that there is some sense of, in these bear markets, the last bear market, we had a lot of innovation and a lot of building come through that. And I think that there's a real kind of somewhat of an optimism that this will be another real period of growth, of moving the entire industry and all of the technology and its applications forward. And so I think those projects that have the runway to do that are certainly in that mode, and others that are kind of already even moving into the space. I think investors still have an appetite for those kind of projects because they're thinking big and they're really thinking about transformative implementations.
Think about the topic of digital currencies, and it's going to vary country to country. But where do you see the U.S. on that playing field?
I tell clients a lot that, having been at the SEC views itself as having very long arm jurisdiction. And so
what does that mean?
Kind of being able to reach anywhere everywhere. And unfortunately, because if you're, with crypto, you can't control where your token ends up. If you're listing on the Tel Aviv Stock Exchange, your common stock, it's only going to be traded there. Now, if you start your project in Tel Aviv and you launch a token there, and you haven't put any controls in place, it's very easy that a U.S. holder ends up with that token, and then all of a sudden, the SEC or any U.S. regulator, I should say, can try and exert their jurisdiction. No, it should be harder to do that, but in general, I think that they view themselves as a very loud voice in the room as it comes to regulation of securities, regulation of currencies, regulation of new technologies. But I think that it's starting to build in some momentum in other jurisdictions to say, can we be a better jurisdiction for these kinds of new projects and new technologies? And there are a lot of founders over the years that have come to me and said, I've founded a number of companies. I never would have thought of not doing it in the U.S., but they are looking outside the United States for those reasons. The challenge, of course, is that you can go to all that trouble and you may still find, again, if your token ends up, in the hands of a lot of U.S. holders, you may still find yourself with the SEC or other regulators, trying to exert jurisdiction.
So let's say, Karen, I need you. I need some help. Can you take me on? What does your calendar look like? How do you decide who are the best fits for you?
We'll talk to almost anybody, right? I mean, 30-minute phone call to hear what you're trying to work on, what you're trying to build, and seeing if this is something where we can help. For example, if you want to launch in Malta, I can't help you. I'm a U.S. lawyer, and so we can only help on U.S. matters. But I think that's really what we try and do is really kind of talk through the product with people that call, email, referrals, things like that. There's more than just me at Goodwin who does this. So there's a few other people that get these same emails and phone calls. But talking through the product of what it is you're trying to do, and then us kind of thinking about if this is something we feel like we can help you kind of find those tweaks, find those pieces that you can maybe change a little bit to reduce your risk, and definitely want to make sure that there's not an easy argument that you're a security. Like if you tell me, hey, I'm going to sell my token to raise a whole bunch of money, and then I'm going to launch I'm going to use that money to build the product. That sounds a whole like investment of money with the expectation of profits from the efforts of others. So we run through that on a phone call and think through it. And in terms of the calendar, it's still busy despite crypto winter, so to speak. There's still, as I said, a lot of people that are trying to build, so it's busy, but we have time. We try and make time as we can, because there's so much demand in this space. And as I said, this is fun for me, and I'm excited by so many of the projects that call and you get on that call and you're just like, God, that's really cool. That's really exciting. That's such an interesting idea. And so we do what we can to try and make that time. I
would assume that there are a lot of people in your profession who'd be like, I just like the way we did stuff before. This is just it's too much. We're rewriting everything. It's just too much. I don't want to touch it. What do you think excites you the most? I know you're excited, but what is it? What excites you the most about this?
Well, I think that the way that this is designed to bring people together on a decentralized basis, meaning that anybody throughout the world can be a part of, can contribute, can be a stakeholder, can add value, and then also be a part of the value that they're creating. And that doesn't make it a security. It makes it something that people are contributing to a bigger and better valuable good. And sharing in the network effects that they're creating. And so I think you're expanding the total available knowledge of a group of people that can contribute value and knowledge. And when I say value, I don't mean dollar value. I mean, code. I mean, ideas. I mean, network effects. I mean, bringing people into a system. And so I think that is just incredibly interesting to be able to do that on an entirely decentralized and disintermediated basis, where people are able to do that on a peer-to-peer basis without having to go through a centralized entity that could be expensive, cost prohibitive, or could be censored, so that you're not able to have true discourse. And really the way that this can be used, I think we're only just kind of scratching the surface of what a technology that is allowing for a true decentralization could enable.
So when we're talking about scratching the surface, is there some futuristic movie version of the story where you're like, you know what, give me 20 years and then we're all going to be doing something very differently that we are not doing now, like humankind?
Yeah, I think we're already on that path. I think in part the pandemic opened us all up to the world of being remote from each other necessarily, and so discovering that we can all be contributors to kind of a traditional system sometimes, but from our own homes, and then expanding that to be, you can work from anywhere, you can contribute from anywhere. And so I think that we're on this path of enabling communities that are truly global. And I think that we're on that path in a lot of different ways, but I think this is technology that can enable that. in a really interesting way without kind of centralized intermediaries as the gatekeepers for who can join and who can contribute. And so I think, I think that we're in a world where we see this as tokens can sometimes be right now are viewed almost like as a business to consumer or consumer to consumer transaction. But I think that there is probably a world where just like, the internet runs behind almost everything we do and use, like our refrigerators and our alarm systems and, God knows what else. Tokens could be moving between the parties that are now providing those systems, either via decentralized storage, decentralized, web services, decentralized VPN, whatever that might be. And you may not ever even know it. And I think that, without question, is where we could be in a few years, well, probably a decade or so. But, and I think my concern is that by placing too much regulation and continuing to treat this as like an investment and a financial instrument instead of a technology puts us at risk of not achieving that.
That was going to be my next question. Would you say that that's the biggest barrier that you have to deal with on a daily basis, is that thinking of, as you say, it's not a security. There's so much more to it. Do you get a lot of pushback on that?
Yeah, I mean that is what we have to deal with. Is most of these things are not securities in my view, and so but we still have to deal with the fact that it could be viewed as a security because these are all so fact specific, so that it could be, you see this in a lot of different ways where the facts and circumstances, as I would analyze it under the Howey test, are going to be different than how, the SEC staff are going to analyze it. And because you can pick and choose your facts when you do a factual based analysis. And so we have to, unfortunately, live in a world of, how do we first off, create the best facts by actual facts by, being as compliant as possible with this in mind. But unfortunately, living in a world where, if we want to avoid those risks, you have to change your product. I mean, this is what I was saying back to the very beginning of I'm part of product design, and regulation is changing how these products are launched.
Can exist. Yeah.
And designed, and how they work and how they function.
So when you're not making sure that people don't move to Malta or go to prison, what do you like to do for fun?
I mean, I love going up to wine country, sitting and enjoying a nice glass of wine at some beautiful winery. I'm in San Francisco, so getting down near the water and just kind of being near the ocean is really fun for me. Take the dog over to Ocean Beach, and she's a terrier, so she doesn't like the water, but she likes to run around and have a good time. So we just kind of stay on dry land with her. But
there you go.
I'm also fixing up the house, doing some decorating projects, and sometimes just sitting in the backyard with friends and drinking some of that wine that I buy in Napa.
I love it. So it not necessarily that it has anything to do with work, but having moved out to Silicon Valley, kind of looking for something a little bit more dynamic, a little bit more your pace of career. What do you notice about being here that you didn't have before that's helpful to you?
I think that being out here, it's a different ethos for your lawyers, and I think that I learned that from the very start when I came out here to work with startups as opposed to giant public companies that had already done an IPO, which I was doing at the SEC. Is that I was used to looking at a regulation in a very old statute, or a regulation of the statute, and just saying no, that doesn't work. The regulation says this, and so you can't do it. And coming
yes
out
or no.
here is the ethos of the innovator is not just at the startups, it's also at the law firms. And so the answer that we're trying to get to is not just no, you can't do it. You're trying to help these businesses grow and thrive. And that was definitely an ethos that I learned very early on from the lawyers that when I came out here, and those true kind of startup lawyers that are every day working with with new companies, new founders, and I think that innovation and kind of let's find the way and maybe an optimism almost.
Yeah. We have to be optimistic.
Yeah.
Doing this stuff.
And sometimes in DC, don't find as many of those optimists.
Right.
So I think that's a big one, and I think it's fun to be out here professionally, and also I think that it's also just fun to hear what people are doing when you meet them.
Mm-hmm. I think there's. I mean, it's almost become a joke at this point where people say build.
Yeah.
But there are so many builders, and all over the world, but particularly in Silicon Valley.
Yeah.
And you're just going to run into interesting people who you want to work with.
Yeah, right. And that you want to have a glass of wine with, as I back to my themes.
Come on up to Sonoma.
That's
we'll
right.
Well, thank you so much, Karen. This has been a real pleasure.
This has been fun.
Yeah. Thanks for letting us know more about what you do and how you do it.
Yeah, it's a really fun space to work, and I can't wait to see what the future holds for this industry and the folks that are building, and help them as best I can to achieve that. So.